I started my investment memo debrief by saying, I will regret this decision for the rest of my life, but having looked at the numbers, I cannot in good conscience justify investing in 2 billion valuation. They were doing 100 million GMV, 18 million net revenues, losing 18 million a month. Lesson to myself. When it's something magical and special on a rocket ship, you go like whatever, OpenAI, SpaceX, you do it.
Hello, fellow data nerds. My guest today is Fabrice Grinda. Fabrice is the founder of FJ Labs, a venture capital firm that has invested over 1,200 startups. He previously built and sold 3 companies as CEO: Auckland, one of Europe's largest auction sites; Zingy, which was a mobile media startup sold for $80 million; and OLX, which is a global classified platform which operates in over 90 countries and over 150 million monthly users. FJ Labs recently closed a $290 million third fund and is one of the most active venture investors globally. Fabrice, welcome to World of DAS.
Thank you for having me.
Okay, now you and I are long time friends for over 20 years. You're also one of the most prolific investors out there. I mean, you're literally making like hundreds of investments every year. How did you end up with that model? Like what made you kind of move to that type of model?
So the intellectual answer would have been, oh, I have done a top-down analysis of what is the proper way to maximize IRR. And I realized that because venture follows a power law, the diversification leads to higher IRRs. And if having done all the research, clearly a diversified portfolio leads to the best returns. And the answer is that is true, but it is actually not the reason I did that model. I did that model because I followed my curiosity. And whenever I met a founder that was doing something interesting that I liked, I was like, I need to back this guy because he's doing something, he's trying to solve a problem in the world. And the world is beset with problems. And I think founders basically see these problems and try to find scalable, repeatable, profitable solutions.
Just to jump at what you're saying is like, hey, you see a cool founder, you can't, if you had like a core ownership requirement or something like that, well then you wouldn't necessarily always be able to back that founder because they may not have room. Or if you always want to take a board seat, okay, well you can't do that because they may have had somebody. So you just kind of backed into it through the other way. Like you just want to back founders, like great
Whenever
founders?
I met someone doing something interesting that I thought was solving a problem in the world, I wanted to back them. And
Okay,
when I liked them. And so I just wrote a check. And it's completely bottoms up. I mean, someone I like, regardless of stage, category, industry, etc. I invest. I don't invest. And so and it just led to this very diversified strategy. I think it's a reflection of my intellectual curiosity, right? Like there's infinite problems in the world, and all these founders are trying to solve all of these problems, and I want to help them all of them solve it.
And but is like, how did you like actually operationalize it? Because like doing hundreds of investments per year means you have to, not necessarily you, but at least your team has to meet with, at least 10x more of those types of companies every year. And you have to kind of think of like, how does one like actually operationalize that kind of investing strategy?
Yeah, so it happened kind of naturally and organically because I was a very visible consumer-facing internet CEO. So I was getting all this inbound deal flow and was just drinking at the fire holes of deals. And I hired a first analyst many years ago, and to see could I actually teach them to filter, because obviously you don't want someone to pass them the next Uber, and or send me deals that are not compelling. And I realized that my processes were scalable and repeatable. So now we're 9 on the investment team. We get 300 inbound deals a week. We talk to like 40 because the others are out of scope. They're too early. There's too many of them. We're not ready to make a call on that category. And I will speak to 3 to 5. And so that filter of 300, and we invest in 3 every week. So let's say 300 to 5, and then we invest in 3. So we invest in 1% of the deals we see. Is something that's worked extremely well.
Interesting. What do you think? Like, is there a, because at this stage, or super early stage, a lot of it's really about the founder or the founders, right? How does one like do some sort of assessment? I mean, you're really probably only meeting them a couple times, right? Like, how does one assess like the quality of the founders?
Yeah, so it used to be just one hour meeting with me, and now of course there's a team. So now it's
Yeah.
a 1 hour meeting with someone else, and then a 1 hour meeting with me. I'll tell you how to not to assess founders. Don't do reference checks. Uh, Founders often reference badly because they were not meant to be employees. They were talking back to their bosses. They
Yeah.
were they were working in their startup while they're at startup at their job, etc. So the way you assess a founder in a 1 hour call, to me, is easy. Actually, I think in one, first of all, humans are inherently social animals. If there's one thing that we do well is we know whether we like someone or not, and we can gauge chemistry within like 30 seconds or 1 minute of meeting just through the first few interactions. And so the way I evaluate a founder is two metric. I want one who's extremely eloquent and an amazing salesperson. And by the way, introverts can actually be very
Of course.
salesy.
Yeah.
I think we are probably examples of that,
Yeah.
and very eloquent. So someone who can weave a compelling narrative because they're going to be able to raise capital at a higher valuation. They're going to attract better teams. They're going to get better BD. They're going to get more PR. But that's a necessary but insufficient condition because I also want them to be able to execute. And so the way I tease out whether they're going to be able to execute is actually because I use 4 selection criteria, not one. And the second one of which is, do I like the business? And so I need them to be able to articulate, even pre-launch, what the total addressable market size, what do they think the customer acquisition cost looks like, whether it's sales or marketing, et cetera. What is the contribution margin of the business? What's the average order value? Are they in line with the industry numbers? So I need them to understand and know all these things and to be able to articulate what they think the long-term value is relative to the customer acquisition costs. And
So you're
if they
you're
haven't,
drilling down on those, like you're actually asking that specific question.
yes,
Yeah.
correct.
Okay.
And usually the ones who know the business well, who thought through it, they actually are on top of the numbers, and it comes naturally. And the people that are just like they have the vision, but they wouldn't know how to execute, typically don't know how to answer these questions, haven't
Yeah.
thought through these, and they're like, oh, I'll figure it out. And to
Yeah.
me, I need both. I need the Venn diagram intersection of like the great executors and the great salespeople. And that is actually pretty rare. I usually
Yeah.
find the founders are in one or the other, not both.
And then there's sometimes there is a product. I assume quite a lot of times that sometimes you can play with the product or see the product, or how important is that?
So most often we're mostly seed investors, not
Yeah.
pre-seed investors.
Yep.
And by the way, the reason is I don't invest in competitors, and so I'm making you're the bet. And so often at pre-seed, I see 7 teams, like ideas are in the air that are doing the same thing at the same time, and I
So
feel it's
you
too
don't. So
early to
if
make the call.
you, I mean, how narrowly do you define a competitor? Because if you're doing like 3 deals a week, 150, like there's going to be some competition that happens among that, right? Or no?
Well, if they end up competing by the Series C or B or
Yeah,
whatever,
yeah, yeah.
because
But you're talking about,
they
but even right away, right? There's
right away. No, I mean they
okay.
can be doing exactly the same thing, the exact same category,
Yeah.
attacking
Okay.
the
Yeah,
same
makes sense. Yeah.
problem, but usually ideas are in the air, and
Yeah.
so if someone's pitching me an idea, I usually have 4 other teams pitching me the exact same idea within a 1 week or 2 week
Yeah.
basis, and we'll actually go try to talk to the competitors and make sure we're backing the right horse. So we'll wait. So there is a product. Product is very important to me. The Yeah, look, my 4 selection criteria are team, business, terms, and thesis. And product speaks to kind of a lot of these. Like, do I think they're solving a fundamental problem in the world that I care about? Are they able? Have they built something interesting, which means they're probably a good team, etc. So it speaks to all these different factors.
A lot of your investments have been historically outside the U.S. You've been finding these great, founders who are outside the U.S. more than most people, or you're shaking your head. So maybe I'm wrong about that.
I have well, I used to invest maybe 50% on side. So actually, if I go back to 2012, because obviously I've been angel investing
Yeah.
since 98. In 2012, I think 50% of our investments were like Russia, China, Turkey, and they're countries I don't invest in anymore because
Yeah.
there's been profound geopolitical shifts, and we're now in Cold War II. And so I stopped investing in China after Xi Jinping disappeared Ma, and I stopped investing in Russia after Crimea was invaded, and Turkey after Erdogan,
She
started
stopped
like,
investing in Russia in 2014.
yes,
Okay.
yeah. As soon we had like several unicorn investments there, that after the Crimea invasion, basically the American VCs like stopped wanting to back these amazing companies, and then the oligarchs took over the companies for nothing. So we
Yeah, yeah.
completely stopped all these things. Now, because OLX is so big in so many emerging markets, we have a lot of deal flow internationally. But no, our we're 50%. We've always been 50% US and Canada, 25% Western Europe, 15% LATAM, which used to be mostly Brazil, now is Brazil, Mexico, and Colombia, and 10% rest of the world, which is mostly India. So we're still like
Okay.
majority US. But in
Yep.
the US, because I do read inbound, like cold inbound emails, and over half the deals are cold inbound emails. And of course, they're the lowest quality, but also some of the nuggets, because it's a non-traditional founder who didn't go to Stanford. It's not connected to the community. He has like Series B level traction, but he happens to be in Arkansas.
Yeah.
And you can invest at like seed valuations at a B level traction company, and we can help so much because that
Oh
founder
yeah, for
doesn't know how to
sure.
raise, etc.
Yeah. So you're actually finding these kind of like Arkansas nuggets type of thing.
Well, but we're also finding the short tail. I mean, we were in
Yeah.
Papa and Uber and
Yeah,
Airbnb
of
and
course. Yeah.
Instacart. So we're finding kind of everything, but we are some of the more interesting deals. Like in Brazil, they wouldn't be the ones from Sao Paulo, but they're like the one from Belo Horizonte, and they LinkedIn in-mail messages messaged me on LinkedIn, and they weren't connected, and we just came in and were able to inflect their business because of the role we play.
Now, when you're investing in like a Western Europe, like are those companies still like are they still like Delaware C corps often, or how are they set up usually?
No, they're usually not, because no, they're usually incorporated in whatever country they're in. But the good news is now there's robust VC ecosystems around the world, and so we have a VC partners for France, for Germany, for the
Yeah.
UK, for Spain, for Brazil, for Mexico, and so we bring the deals to them in those countries, and we don't need to go to the US companies.
It's interesting because I think we've probably done 4 deals recently where the founders are all based in Western Europe, and all four. And again, this is like a small n, but all four they were Delaware C corps, even though none of the people were actually based in the U.S.
Are they targeting the US market though?
Well, everybody targets the U.S. market, so I mean, it's so and and later on, maybe one of the founders said, I did eventually move here or something like that, but yeah, that was just I was just surprised to see that
It
because it's so easy
happens.
to set up a
Yeah.
Delaware C nowadays.
Yeah, it happens. It's not that common. It used to be, by the way. Many Europeans didn't target the US market. I mean, yes, the Finnish and the Swedes and
Yeah,
the Nordic people, yes, but like the French, the Germans, and even the Brits would like target the European market, and so
yeah.
that didn't necessarily make sense.
Now, that third criteria you mentioned was price.
Yes.
Like how does one think about that? Because those prices for some of these deals, I mean, well, some of these YC companies are now trading at 30 posts, some of them even higher than 30 posts. Like, how do you think about price these days, and how do you stay disciplined on price? If you're enjoying this podcast, please sign up for our newsletter. Go to worldofdas.com. The link is in the description below. Now back to the video. How do you think about price these days, and how do you stay disciplined on price?
So we do so many deals, right? We see the 300 deals a week. We invest in 150 to 200 companies every year. So we have a very good sense of what we think the median is. And we also look at the data of the median. So we know where the median pre-seed, seed, A, B, C deals are out there. And we've tracked it over time, and we've stayed very consistent. Or our So right now, the major trend in VC, um, in Q1, 71% of investments in the US were in AI. And the AI deals are trading, depending on the category, between 69% and 300% premium to the median
By the way,
valuation.
like 100% of YC companies are AI.
Yeah, and
Yeah,
100%,
yeah,
that's
yeah,
true.
yeah,
And so YC, for instance, prototypically, I would not invest in YC. I
yeah.
go to YC, I look at the best deals there, and I wait a round or two, and usually the price normalizes with traction. And so
Yep.
I end up investing. I just invested in a company, an amazing company called Garage, which is a marketplace for fire trucks. And I don't remember what YC price was, like maybe 30 or 40. We're now 2 years later, they're doing 2 million a month and invested at like 50.
Yeah.
And
Okay.
so on a risk adjusted basis,
So way
investing in the
better.
next few
Yeah. Okay.
rounds
Yeah.
makes a lot more sense. But I do like, they do filter and find a lot of great companies, but I'm not paying 30 pre. And right now my pre-seed median is roughly 6 million, and my seed is like,
Whoa, 6 million post.
yeah, one at five
Wow,
pre-seed.
that's like that's what you. I mean, if you and I when we were investing 20 years ago together, that's actually what we were investing at. You were investing at 6 post.
No, but those might have been seed deals back in the day. Now they're
Sure.
pre-seed. Um,
Oh, no, no. Well, I don't think so. I mean, when we did Bright Roll, it was a 5 pre 6 post
yeah, but they were.
deal.
I think they were
2000
live
that was
attraction.
2006, almost 20 years ago.
I think you might have called that an A though. I mean, it was like pretty ridiculous. Like, say, it
Sure,
wasn't.
but it was the
Yeah,
first money in. First money in.
yeah,
Yeah.
yeah. Yeah, no, I'm still seeing a lot of those deals. My median seed right now is like 14 pre, 16 posts. Sorry, 12 pre, raising 3-4, like 15 posts, 16 posts.
Yeah.
And my median, by the way, my median A is like 30, and my median B is like 60.
Okay.
And the difference is the mean is being pushed up by these insane AI
Yeah,
deals.
yeah. Yeah.
So that by the market median is way higher than we are because of AI, and that's the beauty of being contrarian. So I've kind of kept. I actually just looked at my valuations in 21 versus 22 versus 2019, and we've actually been pretty consistent across the board. Our valuation ranges were more or less the same 2019 all the way to 25.
Because you
Um,
would think, like, I mean, just to push back a little bit, you would think, let's say, the valuation of a C deal should go up every year, roughly the amount that the market goes up. So if the market goes up 10%, so you think like every 7 years or so that the valuations would double. That's what one would think.
yeah.
But what you're saying is like they've really been flat. They've not been going up.
For the last 7 or 8 years, they've been flat, but perhaps because 21 was also inflated, and so then
Yes. Yeah. Yeah.
it compressed. But in our case, our valuations in 21 were the same as valuations in 19 or 18.
Wow.
Um, the later stage valuations have gone up a fair amount, but we also, because we are so disciplined on price, we actually didn't do anything. Look, in February 21, I wrote this blog post entitled "Welcome to the Everything Bubble," and I said because of overly loose fiscal and monetary policy, every asset class is correlated one other way up. Sell if it's not anchored to the ground, sell it. And I mean everything: private credit, publics, real estate, bonds,
Yeah.
stocks, and of course, private liquid tech companies. And there were some you could sell secondaries in. Now, of course, we sold, I think, a tenth of what we wanted to sell. But whenever SoftBank or Tiger came in, we sold. And right now, again, being contrarian, we are doing everything except AI. So if there's now every company I invest in uses AI,
Of
is
course.
technically an AI company, but they're not like the core underlying LLM companies.
Yeah. Yeah.
There's too much competition, not enough differentiation on the data modes. Valuations are insane. I think there's a race at the bottom of pricing because there's 10 of them doing the same thing. And then there's OpenAI ever expanding and eating at what they're doing. And then there's orthogonal risk of like people coming in and like disrupting them completely.
I want to pull on the thread that you were just mentioning these secondaries. So, like as VCs, especially early stage VCs, we're trying to be good at investing, essentially good at buying. At some point, and then usually, traditionally, VCs just wait until the company does something. Maybe
Yeah.
the company sells or the company IPOs, and then at that point, they have some sort of DPI and they kind of move on. But there's another way to be a little bit more proactive, which is to sell secondaries in an ongoing company or to pare down one's exposure. You don't have to sell the whole thing. You could sell 25% of your holdings and stuff like that. First of all, how do you think about that? Like, how does one evaluate the selling side of it? That's a muscle that I'm trying to build myself.
So we have a different investment committee for choosing investment companies and for follow-ons. So we have a portfolio investment committee. In the portfolio investment committee, we present the companies as though we were non-existing investors. Knowing what we know, so it's a completely de novo evaluation of the team, of the company, of the traction. So knowing what we know now, the company, of the traction, of the valuation, if we were non-existing investors, would we be investing in this round? And if the answer is no, because they're not doing well, then we do nothing and usually can't sell. The answer is no, because they're amazing and we love them, but the price is insane. It's 100x ARR and it's going to take them years to grow into it. and we're not going to be compounding at our own IR. So we've been compounding at like 30% IR for like 27 years. So we don't think there's a 10x that's going to continue compounding. If there's an opportunity, we try to take some off the table. Now, these secondaries can happen in two ways. Either there's a round happening, and there are three VCs, whatever, Greylock and Dreessen and Sequoia that all want in. They all want 15%. The founder doesn't want 45% dilution, but wants all three of them in because he doesn't want them to back a competitor. So that's when there's usually a secondary happening, either at a flat or maybe 10, 15, 20% discount to the round. And in these cases where it's overvalued, we sell 50% typically. Just
You'll
because
sell.
it's
So how does one determine the amount that one pares down and stuff?
if it's massively overvalued and it's like 100x AR, it's going to take forever to grow to it, then maybe we sell 75%. If it's, still risky, it's overvalued, but not insane, maybe 25%. But on average, I would say sell 50%.
Okay.
50%, and the magic 50% is as follows. It goes to zero. I made 10x. I'm happy. It goes to the moon. The 50% is big enough that it can ride and will keep us happy. So selling 50% of these moments, and sometimes we'll sell 50%. We'll rebuy in the next round. We'll resell again in the next round, etc.
Yeah. Okay. Because obviously sometimes you regret. Like I sold maybe 30% of my SpaceX holdings in a secondary a year ago, and then since then, the mark's gone up. Like so you can make. I made a mistake maybe by selling early or something.
Yeah. So look, the things that I think can keep compounding like crazy, like OpenAI or SpaceX, I probably would, or Stripe or whatever, I probably wouldn't be selling, but because I don't know where the ceiling is there.
Yeah.
But there are many companies where I think there is a ceiling, and now they're growing.
Yeah, it's a vertical SaaS company or whatever, and it's already
it's logarithmic, and they're now in the part of the curve where it's slowing down, and now they're growing 30% year on year. Like there's no 10x from here. Maybe it's a 2 to 3x, and a PE buyer is very happy with that. I'm not happy with that because I need my 10x, and so time for me to exit. And look, 73% of VCs have not used secondaries yet. Partly because if you own 20%,
what did you just say? 73%
of VCs have not used secondaries yet.
Have what secondaries?
Have not used secondaries.
So they're just never sold. Sold. They're basically only wait until the company does something.
Well, there are two reasons for that. One is if you're on the board, you own 20% of the company. If you don't do your pro rata, the company dies, right? Like it's
if
negative
you're on the
signal.
board, you have to do it. So you
and even if you're not on the board,
because it just looks weird. You would have to get off the board if you're selling secondary, right?
Yeah, but frankly, even if you're not on the board, if you own 20% of the company, it's like, what do they know that I don't know?
Of course.
Why are they selling?
Yeah, exactly.
Right? Like,
so if you own a massive chunk, it's a lot easier for you and I since we own a very small percentage of the company.
Exactly. And by the way, there are two ways to do secondaries. One is in the new rounds, you can when there's buyers that are interested, the VCs, and then the second way is through the platforms and the brokers, the Forges of the world, etc. The problem with that is that only works for that's a super short tail. Like there's only liquidity in like 10 names, or actually 5 names.
And you never really know if when someone reaches out to you, if they actually have a buyer, right? So it's always somewhat like, are they just like ginning up a deal, and this could be a huge waste of your time.
Yeah. So we have a disposition committee. By the way, the one VC that does this well, that is large and has board seats, is Lead Edge. Lead Edge also has a disposition committee, and they make sure that they find exits for companies. Now they do it obviously at a much larger scale. We do it with we own 2 or 3% of the companies. Which also makes it easier for us. But the majority of our exits, and so look, first of all, we've had exits in 22, 23, 24, 25, when most people have not had exits.
Yeah.
And the majority of our exits come in the form of secondaries.
Okay. The majority. Got it. So you're and the nice thing is then you get the money back to your LPs and, et cetera.
Exactly. So we get DPI. So because we're so diversified, we are never going to be a top decile fund. Basically we're at 3x funds every time, we're 3 to 4x, and we're at 30% IRR. And we in good times and bad times,
30% IRR is not top decile. I know it's not top 5%, but you don't think it gets you top 10?
We're typically somewhere in the near the top quartile, sometimes in it, sometimes right below it. Now the problem is people look at us against one fund vintage. They should look at us across 10 fund vintage, right? They should look at us over 27 years. Then we would totally be at the very top. But where we rock is DPI. because these days venture, venture is not really a 10, 12-year asset class, right? The 10 plus 1 plus 1. It's really a 20-year asset class, right?
Yeah,
Like
for sure.
it's,
Yeah.
SpaceX, I think I'm in through Founders Fund 2.
Yeah.
I think we invested in December 2007. We're
Yes.
18 years in. I'm very happy to be 18 years in, but
Yep.
that fund has been extended. And I'm happy to
Totally.
keep
Yeah.
extending it. The
Yeah.
best
It's
companies
one of
stay
the best
private
performing
forever.
funds of all time. Like, yeah.
Yeah.
So
The best
I'm in that
companies
fund
stay
too,
private.
and I'm very happy to be
The best companies
PLB.
stay
Yeah.
private forever, right?
Yeah.
Like, and so the yeah. So the notion that the asset class, it's 12 years is really false. It's really 15 to 20 years, and the best companies keep compounding.
Interesting. And what is your when you think about your LPs that like how is there a certain type of LP that you prefer over others, or how do you think about it on the other side of the ledger? That's your
Yeah.
quote unquote your customer, your other customer.
Actually, wait, I forgot it. So the place where we are top decile is DPI,
Yeah.
because we do secondary. So
Yeah.
we're top decile DPI. Okay, so look, the idea, the LPs, the ideal LP for me would be someone that believes in the strategy we have and just writes us a check every time, in every fund. And it kind of like, look, we love the diversification, we love the performance, we love the fact that you get amazing SPPs and amazing deals given that you have so much deal flow, and we're here every time. I have not found that LP yet. Because most LPs I find are pro-cyclical.
Yeah,
In 21,
they've got their own liquidity issues. They've got the other things. They've got their own diversification issues that they're trying to do.
exactly. In 21, they're like, they're flush with cash. I want to invest like crazy. Invest in tech. In 23, 24, 25, when I'm like, this is the very best time to invest in everything except AI. Give me cash, and they're like, no, we're overexposed to venture.
Yeah.
We've had no distributions. And so people end up being pro-cyclical, and that's true of family offices. That's true of pension funds, endowments, institutionals. I think it's true across the board. It's true of corporates. Now, our LP base has been amazing. Other founders, like whatever, Niraj Wayfair, Reid Hoffman, like the PayPal Mafia, like the we know in common. But they write like swell checks every time. Two, family offices often being disrupted by tech. So like the Walgreens, Ankle, H&M, et cetera. And like three, it's been like corporates that want to buy a lot of the companies that we invest in, or want to understand what those trends are. So it's been like the Naspers, Prosus, Adavanta, Axel Springer, eBay, et cetera. But there's kind of churn across the board, and also later stage funds like Tiger, who wanted to invest in the follow-ons. Now, a lot of these corporates we have were bought by private equity, and so they're not investing in us anymore. The later stage funds like Tiger are no longer really that active, don't need lead gen. They're churning. A lot of the family offices are pro-cyclical. So I haven't found that perfect investor. Now, I wish, and I'm hoping, and I'm trying for Fund 4, where we just opening right now. Fund 4, we just finished deploying Fund 3. It's a 3-year deployment schedule. It's a flat $300 million fund. I'm hoping that we can go institutional for the first time, and we can get maybe more permanent capital. The issue we're facing is they don't love diversified strategies because they feel that their job is to get diversification by investing in 20 concentrated funds, and then they end up having an implied portfolio of 500 companies. So I'm kind of doing their job for them, and so they don't really get it. Even though I'm specialized in like asset light, network effecty, marketplacey businesses, it's not a strategy that has resonated with that many institutionals.
Yeah, it's interesting because if you are a concentrated seed fund and you are not a benchmark, like you don't have the brand name of a benchmark, it's very possible that because if you have ownership requirements, it's very possible that the self-selection of the companies that would let you invest are not the ones you want to invest in. Right? It's very, it's often many companies have an extra, let's say 1 to 500K that you can invest in, but they rarely have an extra $2 million at the seed.
Yeah, you and I, because we're writing swell checks like 200, 300K, 100K.
Yeah, you could always
anyone will let us in, and we're value added. They love us. We're friendly. We decide very quickly. We're not onerous in any way, shape, or form. But yeah, if you're creating a seed fund and there's slow ventures and benchmark, whatever the other side, why would they let you in?
Now, what is it like? nowadays, what does it mean to be founder friendly? Like, is that a positioning that you take, or how does one think about that?
The So yeah, I thought long and hard, what is my value proposition to the founders, right? And
Right.
in a world where Primary or Andreessen, they have like platforms and like whatever recruiters, and I don't have the AUM I can't afford any of
Yeah.
that stuff.
Yeah.
And I'm like, okay, what is my superpower? And I think that the core one that we do is we can help them fundraise. And in this environment, especially if you're not an AI, is super powerful because we're not leading, we're not pricing. We have basically these very strong relationships with like 100 VCs where we share deal flow with them, and we stack rank our portfolio, and we will bring them the very best companies that are appropriate for them in terms of stage, category, etc. So it's kind of a win-win-win. The founders love it because we tell them, look, you want to send reporting, great. You don't want to send reporting, that's fine too. I just want to talk to you once a year, when you're going to fundraise, let's review your deck. Let's review your pitch. Let's think through if you're ready to raise, what do we think the correct metrics are for raising, who the correct VC is. We'll make the intro, we'll write a blurb. Because we make the intro as a 95% conversion rate to an acceptance, we'll get you to the pitch meeting. We'll then back channel until we get you to a term sheet. And so the VCs love it because they get differentiated deal flow that's filtered. The founders love it because they get funded and they get access to the best VCs in the world. And we love it because the companies get funded. And by the way, in return, those VCs typically invite us to their deals.
Yeah.
And we get the 200-300K checks here. So this works extremely well. Now, beyond that, I will spend personal time with the top 20% of the portfolio in terms of helping them through strategy, et cetera, like in marketplace dynamics. And of course, they find that extremely valuable as well.
And how do you think about things like pro rata rights and some of these other kind of rights that are helpful?
I ask for them every time, like preemptive, right, et cetera. But if I don't get them, that's fine too.
Okay, got it.
So we
Interesting.
ask for a side letter. Look, we didn't write a big enough check to meet the criteria of a majority investor, but would you mind giving it to us? And I'd say over 50% of the cases we get it.
Yeah.
But my learning is that paper is not worth the paper.
You
It's
still
not
have to
worth
help.
the
If you're not helping, they're not gonna let you.
exactly.
Yeah.
It's not. The founders can do whatever they want, and so if you treat them well, they're happy with you. They're gonna let you in. They're gonna find a way to get you to invest, etc. And if they don't like you, even if you have it on paper, they can not give it to you because they'll say, oh, the other new investors don't want or whatever. So I think what matters more is the actual, not in theory, but in practice, be founder friendly.
Now, assume when you're assessing a company, you're meeting with the founders. I assume most of the time it's over video. It's not in person. Is that right?
That's correct. Yeah.
How do you think about that? And would it have been, obviously you can't do it in person, but would it be better in person, or do you think it not matter much? Or
I'm obviously I'm based in New York, right? So
yeah,
I meet the New York founders, but the New
sure,
York founders of the entire portfolio, yeah. So of the 1,200, maybe I've met 100, right? Like, so we're not even talking 10%.
yeah,
Um, I find that actually chemistry, vision, ability to sell, et cetera, comes across well even on video. Even and I was in early, so I started investing for us in '98. I was using Skype, so the first investments were all made over Skype back in the day,
yeah,
and so I was a digital native to investing as an angel, and so kind of nothing changed. Like the Zoom transition in COVID, like I was already there.
yeah,
Uh,
yeah.
so is it helpful? Yeah, I would. It's nice to build better rapport. But I think it's helpful at the margin versus I think most of what I need gets through. And of course, it's on video; it's not just voice.
Yeah.
And the way I
A
have these
video is
conversations,
helpful because you can see
yeah,
the facial expressions and other
eh,
types of things.
yeah. By the way, the way I run these meetings, so I'm doing the second calls these days. I don't have them retell the entire story. Like I've read the notes, I've read the deck,
Yeah,
I have like questions. I literally go in Q&A, right? Like, so
yeah,
it's always like, hey, this is my understanding of what your business is. Am I right or wrong? If I'm wrong, like correct me. And it's a conversation. And so it's never someone pitching me reading a deck. Because that you can practice. Someone can actually be very good at like doing the same deck 50 times or 100 times because every VC makes them repeat it over and over again. But if you go drill down like really conversational and we go deep in avenues and unit economics, etc., then I get a much better sense for like, are they really on top of everything? And and because I know marketplace as well, I'm gonna ask them about like elasticity of supply and demand and
yeah.
like, how do they make like it's detailed enough because I know what I'm talking about that I can evaluate, whether they're there.
you've written a lot about that so many of these great companies were founded during recessions during the years. Like, why is that true? Is it really true? And if so, why is that? Like, why would that be?
So it is true, but it's not. Amazing companies were funded in boom years as well. To be
Yes,
clear,
yeah, yes,
now some companies, I can make arguments for why they are really the product of recessions, right? Like in Airbnb's case, um, it really it took a cultural shift to be willing to have someone come and live in your house or stay in your house, whether you're there or not.
yeah,
And the fact that people were in financial dire straits in 2008, 2009, 2010 meant they were more willing to actually monetize their primary asset, which is real estate, in a way that they weren't before. Same thing with Uber, right? Like
yeah.
if you need an extra source of income, it was an easy way, easy-ish way to make
Yeah, or
20,
even
30, $40
Zynga,
an hour.
like more people were willing to they needed free entertainment, so playing like a free to play game or something like that was probably a good thing. Yeah,
Exactly. And so in this environment where cash is limited, you're willing to find new ways to monetize and or to entertain yourself that are cheaper. And so from that perspective, so it's helpful at multiple levels. It's helpful there. Number two, it's helpful because instead of having 27 companies funded doing the exact same thing,
yeah,
which basically brings the economics and brings off the customer acquisition cost, you bring pricing down and destroys potentially the value of the business because there are too many competitors. You only have one or two. And it's not fair weather founders. You have like the true believers that are doing it because it is their life's mission and they need to do
yeah,
this no matter what. And as a result, they're more likely to win the category and they're more likely to succeed. And so I like it. You're coming in at a more reasonable valuation. There's less competition, and people are more willing to try something.
yeah, yeah, yep. Okay, I like that as well. And even like hiring talent, it might be easier to get great talent during that time.
Absolutely, absolutely.
Now, is there like, I assume you track deals that you've passed on that did well, right? Something that we do is we track things. Okay, we passed on this deal, we did well, or so that we also even track on deals we didn't even see that did well. We're like, why didn't we see that deal?
Yeah.
Like, how do you have a process of actually going back in time and looking at these things to get better?
Yes, but I'm not sure I would get better well, a few things. So many deals that are amazing we passed on because of price,
Yeah.
and they went on to do very well. Uh, but when I actually look at all the other ones I passed on because of price that end up not doing well, often because of price, like they didn't grow in the valuation, the blended return of that entire portfolio is actually lower than my current return.
Yeah.
And so so I don't regret passing on price, even though um, there's a few exceptions. The exceptions are, like I passed on the $2 billion Uber round. They were doing 100 million GMV, 18 million net revenues, losing 18 million a month. Right. So I was
Ah,
looking at the numbers and
yeah.
I'm like, looking at these numbers, and they're raising 2 billion. But they were growing like this. And I loved the product and I loved the team. I loved everything. And I started my investment memo debrief by saying, I will regret this decision for the rest of my life. But having looked at the numbers, I cannot in good conscience justify investing in 2 billion valuation. Lesson to myself. When I started a sentence by saying, I will regret the
For the
decision for
rest
the
of my
rest of
life.
my
Yeah.
life, you
You
make the
probably should
investment.
invest. Yeah.
You
Yeah.
hold up your nose and
Yeah.
you make the investments. you know. So when it's something magical and special and a rocket ship, like whatever, OpenAI, SpaceX, you do it. But there's very, very, very few of these.
Well, so one of the things we do at Flex Capital is we track deals that we didn't see that later seem to be doing well or whatever,
Yeah,
and then we try to go back, like, why didn't we see it? What was
yeah.
going on? What was happening? I know you have most of your deals through inbound. We do a lot of outbound as well. So like, are you looking at any of those things? Just like, okay, this is a clear winner. Like, I wish we would have seen Anthropic, for instance. Like, we never saw Anthropic as a deal. It would have been great to have seen it. Even if we decided to pass on it, it was still would have been great to have seen it.
In marketplaces, network effects businesses, we see probably 97% of the deals.
Whoa,
A
okay, it's
very
crazy.
few we don't see.
Yep.
Because if you're now, and if we want in, we get in 95% of them. Now there are a few we don't get in, despite the fact that we commit. all of a sudden, whatever, Andreessen, Secure,
Yeah.
Greylock get too ownership hungry, and we end up get cut off, even though we only won a couple hundred K. It happens very rarely. So on the 1,200, like how many of these deals would there have been? Max 20 more.
Okay.
So it's not a big source of concern in our case, but obviously we're reasonably narrow from the things we looked at. So we didn't see Anthropic, nor would we have looked at it or expected to see it either.
Yeah. Yeah. Totally.
Yeah.
Switching topics, you are super interested in gadgets. You have a gadget guide, and a lot of them are like. You think just like one of the things I love about you is like you're about like having fun. So many people like have these gadgets like for productivity and stuff like that, but so many things you care about are really just like they have nothing to do with productivity. They're literally just about like having a good time.
Life should be fun.
Yeah.
Look, it's a game. I'm a gamer, and perhaps because I'm a gamer, I see this world through the lens of gaming. Now you only get one life with this avatar, but it really feels to me like it behaves like a video game. And so it's kind of hard to take a lot of these things seriously. And I love what I do, right? And so the I don't know, like the philosophy of Alan Watts, like the Zen, the Taoism, where it's a game, but you play the game, and as a result, and you do it with like zest and humor and grace. I think always resonated with me. Like having kids, so I have a 4-year-old and a 1-year-old.
Yeah.
Like allows me to be an even bigger kid. Like I actually, when he's building train sets, I realized I like building train set. I like building the magic tiles, and like we have remote control cars and planes and helicopters. Like we have the best time ever. Like I don't know, people take this world and this life way too seriously. Like I love what I do because I think it's doing something meaningful and purposeful in the world, but I do it again with fun. So
It's more of a
and
macro question, but like, do you think people are more serious today than they were 20 years ago, or is the same or less, or like, are people silly enough? And
the I think the answer people want to give intuitively is, oh, people are taking these things so seriously today, etc., and they're not having fun and levity. I don't think that's true. People have always taken the world affairs very seriously, and if you think back, right, like 1960s or like the desegregation movement and the in the 1970s, yeah, the anti-war riots,
yeah,
like people were
you had
taking things.
violence in Europe all over, and
We had like like the lines for oil, and like people were taking things that were very and massive recessions, right? Like
yeah,
very somber and taking things extremely seriously. So I don't think people are taking like the game of life is taken more seriously than I think that people should take it. And yeah, so I think in all times people are too serious. Like you should have more fun and play with things, and you age better, you have a much better life, frankly. Like to me, it's all the game. And I realize that I'm speaking of a position of privilege. But even if imagine you're a bus driver and you have to drive a bus every single day. If you see it as like, oh, this is this dreary thing I need to do on an ongoing basis, yeah, you're going to burn out. But if you make a game out of it, it's like, okay, how quickly can I do the route? And like, today I only do it just saying the right, like whatever, like gamify your
totally.
life and make it fun. Like,
This is
like
I was just in Italy, so I came in on one day and left on the next day. So kind of a quick trip. On the one day I come in, and the immigration guy, this Italian immigration guy, this guy stamps your passport. He was hilarious. He was making jokes. He was making like we were having fun. I was with my son. They were like, it was just like he was just like all. And then like on the way out, we had this like super grumpy guy, right? Who's just very grumpy. It's like you want to be the first guy. Like the first guy was just having such a good time. I had the same job, but like he just
exactly.
clearly enjoyed his job a lot
It
more.
doesn't
Yeah.
matter what you do. Just
Yeah.
just have fun with it. Like don't take it so seriously. And that's why, yeah, no, I love kite surfing. I love playing tennis. I like playing paddle. I like camping, backcountry skiing. Look, I've taken my son to do all these things and paragliding, and like we have a blast. Like same thing. People take parenting too seriously. Like for the most part, you're not going to kill your kid, and it's good for them to take like controlled risks. And so go do like don't stop living your life and become a parent. You do all the things you used to do, and you do it with your kids. Like it's one more thing you can do together. It's amazing and it's fun.
So what have you? Because you're relatively recent. Like here, I know you kind of you also have adopted daughter, but you're relatively recent, like on like kind of like the 0 to 1 parenting side. Like, how has that changed you?
Hasn't really changed me in any way. I
Yeah,
still do the same
you
things.
don't see. I mean, I've known you for a long time. You don't seem to be that much different.
No, it's like it's allowed my inner child to express itself even more, right?
Yes.
Like I would roll around the mud with my puppies and my dogs and other people's dogs actually. But now, like I can even play more. Like it's like it's an excuse for more play and
Yeah.
more fun in life. And yeah, we have a blast now. I have an amazing life partner who because clearly I'm the gut cop and my role is play. And I've embraced that role. I will embrace it for the rest of my life, and it's amazing.
Now you're also like personally using AI. What are you kind of like using it for that you think other people could use it more for?
I use AI for like I have hours long conversation with GPT every day. And
Hours.
yeah, philosophy, research. I'm thinking of
And what is that taking the place? Was that taking place of like when you were reading? Is that taking place of conversations you have with other people? What is that? You know, what's that? What's the time displacement happening?
the first of all, it's replaced Google completely. We can
Yeah,
start there.
yeah. But that was
Um,
quick. That wasn't that much
that was
time.
quick.
Yeah.
Yeah, it's rabbit holes. Yeah,
Or
ba-
Old Wikipedia rabbit holes that you're going down.
It's replaced Wikipedia rabbit holes for sure.
Yeah.
YouTube to
Yeah,
some
yeah.
extent.
Okay.
'Cause
Old YouTube rabbit holes. Yeah.
but it's actually also so much more efficient. So let me give you an example. I'm toying with the idea of moving out of Turks and Caicos and somewhere else. And so I started having conversation with GPT about like where else would have the same quality of beaches, but not of the downsides of things I don't love in Turks. And it ended up suggesting 4 countries, which we narrowed down to 2 countries, 4 islands. Then it identified like base of what the off-grid community I'm trying to build, like actual land that was available based on an analysis of the maps of where was open. Then it found me the owners, and it said, you know what? I actually think you should go and buy this hotel because it's like decrepit and falling apart in 3-star. And here's my comparative valuation analysis of how much it's worth based on multiple analysis I've
Holy
done of that.
mackerel! This is so
I've
cool.
created I've created a financial model of what I think their P&L looks like based on their published rates on Expedia and Booking for like several years, times the average occupancy of the country, times the labor costs for these types of hotels. This is the P&L. This is what I think they're worth. By the way, it's a 3-star all-inclusive resort. This is the multiples at which these resorts have been trading at for the last like 5 years in the country. Therefore, on a comparable analysis thing is worth this much. So these are the owners. This is how much it's worth. If you want to buy, maybe offer like 20 or 30% more.
Yeah.
But don't start there. Start at market value and then be willing to pay 30 or 30% more. Like this is a deep research project, obviously, and it took it like hours to get me the results.
Yeah.
But
Yeah.
it's basically a McKinsey analysis, McKinsey level results through interaction, through several hours of interaction. It is mind-boggling, and I've used it for, if I need coding help, it gives me the answer. If I need research on like medicine, like supplements, like I'm trying to heal my tennis elbow, and so we had deep conversations of peptides and whether or not I should use peptides to heal my tendon.
What do you come up with at the end of the tennis elbow?
So I've done PRP, cider-rich PRP, and we shrank the tear from 1 centimeter to 0.3 centimeter, and now we're doing BPC 157 with TB 500 peptides because they're not growth hormone. And where are they injected? What is the right quantity? How do you get them? Which
so cool.
All that stuff came through from interactions with Dr. GPT. It's like mind-boggling.
That's so cool.
You can use it for everything. And by the way, here's something that's interesting. Like 2 years ago, I used Midjourney, I used Runaway, I used so many other AI tools, and now I just use GPT for literally everything.
Yeah.
Okay, Cursor for coding, but and even Cursor, I can see in the future, GitHub and Copilot will just offer it for free, and maybe even GPT will just add it. And so
or you'll use Windsurf, which is a open AI product or something like that.
Yeah, exactly. So I don't know. I use it.
You don't use any of the Google
AI
tools. You don't use Perplexity. You don't use. Yeah. Okay. Yeah.
I've done A/B testing. Once in a while, I go to Grok and Perplexity and Anthropic and DeepSeek, etc. But like, I'm so happy with like my interactions with OpenAI and GPT.
Yeah.
And by the way, now
I certainly stopped using Midjourney like about maybe a year ago or something.
Great.
Yeah.
Yeah. Who needs
Yeah.
Midjourney? And so the OpenAI is eating the world. I think, and look, I think it's an existential threat for Google, by the way. Like, I've
Uh,
stopped using Google completely. Like, I'm 100%
well, you
there.
probably, I mean, you probably still use Google Docs and Google Mail and the suite, and you've got your companies probably still use a lot of them still use GCP, and you're a
Actually,
lot
we
a
were
lot of your
always on,
people use Android, and so
we
they've
were,
got a
we
lot of
were,
things going.
we're always on Microsoft Exchange versus, for a variety of reasons, right,
Well,
versus
why
Gmail.
why are you on Exchange?
Um,
Just to control your own emails, like for security, or
yeah, no, it's not. No, not at all. Google has 50 gig mailboxes. I have emails since 90 whatever two. I have like several terabytes of emails.
you
And
could pay a small fee to get.
it does no, they don't. It's and Google doesn't like folders and subfolders. And the thing is, if you have several million emails and you do search, you get way too many results. So actually, I have a hierarchy of things organized and structured,
Oh,
and
interesting.
that and
I'm
and
looking at
so
my Gmail right now, and I have 2 terabytes in there.
okay, so maybe they
Yeah,
fixed that. But back in the day, maybe a
yeah.
decade ago, it was limited at 50 gigabytes.
Okay.
And so for a long time, there was a size limitation. But then just everything for me is structured in like folders, subfolders by company. So like
Okay.
OLX,
So
I have
like
like
moving would be
product.
just it'd be a hard to move or something.
Yeah, it flattens the hierarchies, and my brain thinks in these hierarchies and folders and subfolders, etc. And so it's really not doesn't move. So it's more a reflection of the way I like to work. My inbox is my to do list, right? Like, so I try to be at like inbox zero. And I find I really happen to like the UX UI and the way I work with Exchange. So it's a personal preference, same way I prefer iOS to Android, but
Yeah.
yeah, whatever.
Now, at some point, I forgot where this was. 10 plus years ago, you were leading a more nomadic lifestyle, where you're having fewer possessions and things like that. What did you learn from that journey?
So let's start by why I did it, right? I did it because as we get older, I find that our friendships fray. They don't have the same quality as they have when you're in college. You're seeing your best friends like every day. You're talking
Yeah.
about future of life and philosophy, and like you go really deep. As you get older, because you get busy with work, with husbands, with wives, with kids, whatever, you start seeing each other every 6 weeks, 8 weeks, and it
Yeah.
becomes a biographical update.
People live if they live in different cities, much
Exactly,
less.
once a
Yeah.
year. Yeah,
Yeah.
yeah.
I was just
So it's
trading
even
emails with one of my best friends from college. I realized I hadn't seen him in like 6 years.
exactly. So I felt that the quality of these relationships was fraying. And I'm like, you know what? I just sold my company. And the other thing is, you have a default, right? If you have an apartment, you live there. If you have a job, you go there. If you live in a city, you stay there. And you ask yourself at first principles, absent any constraints, where would I want to be? What would I want to be doing? Who
Yeah.
would I want to be seeing? And so I'm like, you know what? I happen to be in a very privileged position at this point in time where I actually can be anywhere, see anyone, do anything. Uh, let's iterate. Let's throw spaghetti in the world to figure out how I would want to actually structure my ideal life. Um, and so I started by like couch surfing and friends' couches to reconnect with them, which actually was a dismal failure because, of course, embedding yourself in their lives when they have jobs, kids, etc.
Yeah.
And like,
Yeah.
and I'm also infinite energy. And so my vision of like, we're going to play tennis from like whatever, 8 to 10 p.m. We're going to come home and we're going to, you know, think through like the
Right.
whatever,
They're like,
geopolitics, macro.
I gotta bring the kid to school tomorrow.
Yeah, I need to go
Yeah.
to sleep. I'm
Yeah.
tired. I need to bring the kids to school. We were like different life stages as well. Even though we're the same age, I was like single
Yeah.
and so it was very different. So that didn't work. But I kept iterating and iterating, and then I realized, you know what? I like I find that each city has or time where it's best enjoyed. So I love New York, like September, October.
Yeah.
The weather's pleasant. You have all the new tech weeks, the events, etc. I love New York in April, May, June. Okay, so why don't I live there in like Airbnbs in that period? Oh, in the summer it's too hot, it's humid, it's oppressive, and no one's there. They're in the Hamptons, and I don't like the Hamptons. Okay, let's go to the south of France for a month. Oh, let's go to Canada in August to go climbing, rock, and hiking and camping, etc. And then November, December, let's go to church where I'm kite surfing. And in January, February, let's go to British Columbia. We're in backcountry skiing. In March, let's go back to church. So I started through iteration, where like 1 week, 1 week, 2 weeks, 2 weeks, 2 month, 2 month. I started creating this life where I realized, you know what, I love New York, because it's the center of the world, and it's a haven for creative, social, artistic, professional endeavors. It's where I host my dialogue dinners every like 2 to 3 weeks. It's where I feel the most fulfilled. But every social interaction is professional, and after 2 months there, I am burned out. And also, if you're doing, you're not thinking. And so then taking a step back and going to Turks and Caicos or going to British Columbia, where I'm working during the day, because of course my life is Zoom calls, but then there's none of the rest of the distractions of New York. And I'm like meditating, reading, writing, doing my podcast, writing on my blog, reading my books, and just being very healthy and being reflective is my personal work-life balance. And so I ended up iterating, creating this life that is perfect for me. I'm not saying it's universal, but
Yeah. Yeah. But you
but if I was
optimize
just in
something.
Turks, I'd go crazy. If I was just in Revelstoke, I'd go crazy. If I was just in New York, I'd burn out. And so that combination of mountain, beach, city in the right time ended up being perfect for me. And I came through it just because I had this asset light lifestyle where I could actually try it. And it took me many iterations. I started in the Dominican Republic, not in Turks. That was a big mistake. I mean, but again, you learn from trying.
Yeah,
You know,
you learn.
try
Yeah.
exactly.
Now, you and I, one of the things we share is like a love for dinner parties and stuff like that. What have you found? Like, what's the formula that you figured out that works well?
Well, there you can take all the credit because I basically copied the dialogue dinners, and so I host Jeffersonian dinners where it's one conversation only allowed at a time. I have a round table. I've always had round tables, even prior to dialogue. But I have a round table.
And so
We're eight.
you're capping at a certain number of people,
Correct. So we're 8 to 10.
8 to 10.
Sometimes we could be 11, but very, very smart, ambitious people or tendency to be alpha don't like to be listening for as long for the very long. And so I've
Yeah.
actually had 20, 30 people Jeffersonian dinners, but they're hard to moderate on a long table. And it's hard to keep one conversation centered. And so I'm like, you know what? Just for simplicity, we're going to be 6 to 12, but let's on average are 8 to 10.
Yep.
I'm the moderator. This way, this way I don't have a lost slot for moderator.
Yep.
Pre-assigned topics, either personal or open-ended or topical, like reinventing democracy of the 21st century. Often helped by the dialogue organization, in fact, in terms of finding the people that are coming to them, etc. So it's a combination of my friends and dialoguers, and there's massive overlap between those two. And yeah, you need to show up on time. Your phone needs to be off. You can, yeah. And after 2 hours, I tell everyone that the dinner is completed, and then they're free to go. And so people say, and that model works very well. The differences I've done is like I used to be very strict. Like your phone rings once, you're out. You're never coming back. You showed up 1 minute late, you're not allowed in. Now I'm like, you know what? Show up 7 to 7:30. We start at 7:30. Then you're not allowed in. And it's
Okay.
7:30 to 9:30. At 9:30, I end the proceedings, and you can stay or not if you want. And if your phone happened once in a while, like, yeah, people have kids, etc. They can have emergencies. It's okay. I'm no longer as dictatorial as I used to be. But I do care about,
Yeah,
like,
you do. You obviously that makes a lot of sense for exploring like intellectual topics or
yes.
business things. Have you done for like social, like a similar thing for social where you have couples or other stuff as well?
Oh yeah, like what's the how to be, what's the best way
How
to
to be a
deal with
better
aging
parent or
parents?
something? Yeah.
How to be a parent. I'm doing one with Samantha Stein, another dialoguer on non-dualism in July.
Non-dualism.
Non-dualism, yes, the
Okay.
fact that we are all God.
Okay.
And so yes, I do them on a wide variety of topics. Religion in the 21st century, life in a post-singularity world, which is completely. I mean, no one knows, right? Like, so it's like you're limited by sci-fi and your imagination, or yeah, books you've read, like whatever, like very wide range, and I mix the personal and the but it's again, it's a reflection of probably like me. The reason I do them is I'm very intellectually curious, and our jobs, or we live in a world that rewards specialization. So it's a way to express my intellectual curiosity and polymathy.
Now, a couple of questions we ask all of our guests. What is a conspiracy theory you believe?
I'm going to answer indirectly because it's not a conspiracy theory, but it's a belief I have that I've experienced that I cannot prove. But because conspiracy theories, for the most part, it's like I can like you look at the moon, you can see that we have like flag and like stuff we left there. So, and it was probably the most watched event in history. Like, kind of
Yeah.
hard to fake, or the Earth is flat. You can kind of prove that it's not. In fact, people knew it was around like thousands of years ago. You see the boat going over the horizon and the mass is disappearing. So, not many of these, but through the use of psychedelics, I have felt um, very deeply, primarily, that we are like that. This reality is kind of a simulation, dream, matrix, where basically an otherwise born immortal, omnipotent, omniscient deity has created to have new experiences, and we're all here to entertain each other, and so we're living this dream of life. And I can't prove it, and I've never even but was aware that there were a few philosophies out there that suggested that this belief is, which is why it's interesting because, like, in a Christian type tradition, uh, the God human relationship is like of like whatever kings, or whatever, owner and slave, and not one where we are God. And I felt that we are all basically an expression of God, and that which is why you can manifest, you can in that some rules, like in the Matrix, in this simulation, some rules can be bent, others can be broken. And I felt a sense of unity and oneness, and on acid, on ayahuasca, on mushrooms, that is mind-boggling. And like literally, I would think of something, it would happen. Or I would meet that person at like a Burning Man or whatever. Like, now, can I prove that this is true? No, but I've like lived it and felt it. Like, once I accidentally took 10 drops of acid, like I felt like I witnessed the creation of the universe and Earth, and lived through the creation of everything. I had total ego death. Fabrice, the individual, disappeared, and I became a mother, a surfer. Like, it was, yeah, beautiful and mind-boggling, and yeah, and so it's not a conspiracy, but
Yeah,
it's
no,
pretty
no, I
crazy.
like it. Yeah.
It's pretty crazy. I can't prove it to be right. It could be an epiphenomenon of my brain, but I have lived it. I have had a divine experience. It's like it felt like I communed with the divine,
Wow.
and that's what I think is missing from modern day religious experiences.
Okay, this is cool. Last question we ask all of our guests: what conventional wisdom or advice do you think is generally bad advice?
So I've thought about this one. In fact, it was on the dialogue dinner I had Thursday last week. It was one
Okay.
of the questions in the dialogue dinner. Um,
For the people audience that knows, this is dialogue is something you and I do together to kind of like explore intellectual curiosity with some very other interesting people.
the so I think the answer I'm going to give. So I think there's some piece of advice that can be correct for some, that can be incorrect for others. So one of the common pieces of advice and wisdom is like, follow your passion and see where it leads, and everything will be right for the world. And it is true, if you happen to have a passion that you love and is monetizable and you can make a good living out of it, it's amazing. Like, if you feel that you're playing, what, like I am, and probably you are, like every day I feel like work is play, and and it's amazing. But there are two cases where I think this doesn't work very well. One is, if you have a passion and a hobby and you turn it into your job, you may actually lose the joie de vivre. It may no longer be something that you love doing, right? Like, think of Agassi and tennis. His father,
Yeah.
like, basically beat the joy out of tennis for him, and he started
By the way,
hating.
his book Open is like, I think, one of the best autobiographies I've ever written.
Exactly.
Yeah.
And he was miserable. And so turning your passion into a job is not always a great idea, because it may be meant, it's better as a hobby. And if you turn it into a job and it becomes work, you may hate it.
Yeah.
And so you need to really be thoughtful about that. And then second thing is, the job you should have is like something where you're good at it, the world values it as such, it's monetizable, and you're happy to be doing it on a repeated basis. And it could very well be that if your whatever hobby is like art history, there's only one Met curator, so
Yeah.
you may not be in a position to monetize it very effectively. So I would be thoughtful about that. So, but are there cases where the common wisdom advice works? Absolutely. And it's way better if you love what you do. But there are pieces where it really doesn't work. And so I'd be very thoughtful of that.
Yeah, and going back to that bus driver or the passport stamper, like you can find joy in many things, you know.
Absolutely.
All right, this has been amazing. Thank you, Fabrice Grinda, for joining us on World of DAS. I follow you at Fabrice Grinda on X. I definitely encourage our listeners to engage with you there. This has been a ton of fun.
Thank you, Auren.
Thanks for listening. If you haven't already done so, please subscribe to World of DAS wherever you consume your podcasts, YouTube, Apple, Spotify, and more. And please help us get discovered by leaving a review. And check out worldofdas.com. That's worldofdas.com. And of course, connect with me on Twitter at Auren. That's AUREN. Would absolutely love to hear from you.